Hello viewers, welcome to my channel. I'm Hasham Khan. So now I'm going to start the problems on journal and ledger. In the last two videos, I have given the complete explanation about the journal, ledger, journalizing and posting it into ledger accounts. What are the different types of accounts? What are the rules of accounting? All these things I have explained in the last two videos. Now I'm going to start the problem. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, keep it ready before start watching the problem. First time if you are on my channel, I suggest you to visit the playlist of my channel. I have uploaded so many videos on financial accounting, advanced accounting, corporate accounting, advanced corporate accounting, managerial accounting, business statistics, income tax, financial management, investment management. So many subjects are there. Select your subject, select the video, watch the complete video, enhance your knowledge, get the confidence on the subject, enjoy the learning. Now, I'm starting the problem. See the very first problem on journal. Classify the following under personal, real and nominal accounts. So we are given A, B, C, D, E, F up to J. The different accounts are given. Now we have to classify which account is a personal account, which is a real account, which is a nominal account. So before starting the problem, I'll explain you three types of accounts are there: personal, real, nominal. Personal account are the accounts are related to a person. A business will have dealings with so many persons. Some persons are customers. The business will sell the goods on credit to customers. Some persons are suppliers. They will supply the material or fund to the business. Some bankers are there which supply the funds to the business. So many persons will have dealings with the business. The account will be opened on those persons' name. That is called personal account. Now personal account again are natural person, artificial person or representative person. So natural person, we are all natural persons. So account in the name of Mr. X, Mr. Y, Mr. Ram, Mr. Robert, Mr. Rahim or on any personal name, natural person. Apart from that, artificial personal account, the account of XYZ company, the account of XYZ bank, these are artificial persons. Apart from the representative personal account. Representative account means an account which represents a person. Example, outstanding salary. Only salary is a nominal account. But when we attach a prefix or suffix to salary, it will become a representative personal account. So salary account is a nominal account. If we add up outstanding salary or salary outstanding, then it will become representative personal account. So in this way we have to classify the accounts into personal, real and nominal. Real accounts are those accounts relating to assets and properties like building account, machinery account, furniture account, equipment account, computer account. These accounts are called real account. And nominal accounts are the accounts relating to expenses, losses, incomes and gains. Example, salary account, rent account, wages account, electricity bill, telephone bill, discount, commission, interest, all these are nominal account. So before classifying, you must have clarity regarding these three types of accounts. Now, first account is stock. Stock is an asset. Stock is an asset. So it's a real account. Here I have it. Short problems. Number one, classification of accounts into personal, real and nominal. Serial number, account, nature of account. Serial number and account. Accounts are given in the problem. Serial number 1, 2, 3, 4, 10. Now stock. Stock account. Stock is a real account. Stock is a real account because it is an asset. Second, goodwill. Goodwill is the asset. It's the reputation of the business. So it's a real account. Loan. Loan taken. So when loan is taken from a person, so it is a representative personal account. So simply if you write personal account, that is also enough. That means it's a representative personal because this loan is representing a person. Similarly, fixtures. Fixtures, furniture fixtures are the asset. So real account. Bank overdraft. Bank overdraft is a loan, is a temporary loan taken from bank. So it's a representative personal account because bank overdraft is a loan taken from bank. So personal account. Cash is an asset. So real account. Capital account is also a personal account because capital is representing the person. Who is the person? Owner. The owner investing the money in the business is called capital. The capital is representing the owner. So it's a personal account. Bank account is a personal account because the bank is an artificial person. Then drawings account is also a representative personal just like capital. Capital is the amount invested by owner in the business and drawing is the amount which is withdrawn by the owner from the business. Drawing is the amount which is withdrawn by the owner from the business for personal use. So capital and drawings both are personal. Peter, purchaser. So Peter is a natural person. So personal account, that's all. So we have classified all the accounts into different categories. Personal account, real account, nominal account. Now we'll come to next problem. Second, classify the following accounts into personal, real and nominal just like the previous problem. We are given a number A, B, C, D up to L. Different accounts are given and we have to classify it into personal, real and nominal just like the previous problem. The first, loan from bank. Just now I told you loan from bank is a representative personal account. Furniture is an asset. So it's a real account. Interest is nominal. It is not given whether interest is paid or interest is received. If interest is paid, it is an expense. If interest is received, it is an income. Both expense and income accounts are nominal accounts. So only interest is given. It's a nominal account. Brand name is an asset. So it's a real account. Cash at bank, that's a real account. If only bank account is given, it's a personal. Cash at bank is an asset. So it's a real account. Reserve for bad debts, it's a real account. Only bad debts are given. See here, only bad debts are given, it's a loss. There is difference between bad debts and reserve for bad debts. A bad debts means the debt which is completely irrecoverable and it's a completely dead loss. It is a nominal account. But reserve for bad debts is an expected loss. It is not the actual loss. It may be loss or it may not be a loss. So it is an expected loss. The reserve for bad debts is representing a debtor. It's a real account. Reserve for bad debts is a real account. Then outstanding income. Outstanding income is a personal account. If only income is given, it is a nominal account. Outstanding income is given, personal. Trading account is a nominal account. Then import duty. Import duty is an expenditure. So it is a nominal account. Income received in advance. Any income is a nominal account. But income received in advance is a personal account because it is representative personal account. Then investment is an asset, real account. Capital account is a personal account, representative personal account because capital is representing the owner, representative personal account. That's all. Next, problem number 3. Again, classify the following accounts into personal, real and nominal. Again, few accounts are given, we have to classify it. The first, bad debts. Just now I told you bad debts is irrecoverable debt. That is completely lost, dead loss. So bad debts is a nominal account. Now interest on drawings. Interest on drawings. That is also an income to the business because business is charging interest on the drawings. So it is an income, nominal account. Bank account is a personal account. Already I told you representative personal. Goodwill is an asset. So real account. Capital is a personal account. Then closing stock or only stock is a real account, asset. Furniture is an asset, real account. Bank overdraft is a personal account, bank loan or personal account. Then discount is a nominal account. Then drawing is a personal, representative personal account. Motor car is an asset, real account. Audit fees is an expenses, so nominal account. So in this way we have classified all the accounts into personal account, real account and nominal accounts. Come on, now I am starting the fourth problem. Analyze the following transactions according to traditional approach and second modern approach, that is accounting equation method. So here 10 transactions are given. First transaction, commenced business with cash. Now see here, there are two methods of recording the transaction. The first method is the traditional method where journal entry will be passed, debiting one account, crediting another account by applying the accounting rules. The accounting rules are debit the receiver, credit the giver in personal account, debit what comes in, credit what goes out in case of real account, and debit all expenses and losses, credit all incomes and gains, that is the nominal account. So by applying these accounting rules, we pass the journal entry. That is the old method of recording the transaction. And the new method is accounting equation method. In accounting equation method, we see what is the effect of every transaction on assets, liabilities and capital. Assets, liabilities and capital. It will have a dual effect. Whenever a transaction takes place, it will have double effect. One giving effect, one receiving effect. So both the effects will affect either asset account and liability account or asset account and capital account. Like that, double effect it will have on the accounting equation. That is a modern approach. So in this problem, it is asking you to record the transactions according to traditional and according to modern. So first of all, I am writing the journal entries according to the traditional method. I will record the entries. Now see, so recording the transactions according to traditional approach, journal entries. So journal, date, particulars, LF, ledger, folio, then debit, credit column. This is the format of journal. Now first of all, in date column I am writing the first transaction. What is the first transaction? Commenced business with cash of 50,000. Commenced business means started business with a cash of 50,000. Cash is coming in. Cash is coming in the business. So cash account will be debited. When the owner invests the money in the business, it is called capital. When the owner invests the money in the business, it is called capital. The owner is the giver. His account should be created. The capital account should be created. So journal entry is cash account data to capital. Cash account is debited, capital account is credited. Being the business started with cash. This is the narration. After every entry, we have to pass the, we have to give the narration, explanation about this entry. So commenced business with cash. The cash is coming in, so cash account is debited 50,000. Who is the giver? Owner. When the owner invests the money in the business, it is called capital. So to capital 50,000. First entry over. Now second entry, amount borrowed from Rajesh. Rajesh is a person. From Rajesh, amount is borrowed. Borrowed means loan taken. When loan is taken, cash is coming in. We are having a business. We have taken a loan from Rajesh. So cash is coming in. So cash account is debited. So see here, cash account data 20,000. Now we are taking a loan from Rajesh. So we make an account called loan from Rajesh. This is a representative personal account. This loan from Rajesh is a representative personal account. So credit side to loan from Rajesh 20,000. Being the loan taken from Rajesh narration. Two entries. One account is debited, other account is credited. You have to see cash. Cash is a real account. Cash is a real account. The rule is debit what comes in. If cash comes in, we debit cash. If cash goes out, we credit cash. So in this case, cash is coming in. So cash account is debited to loan from Rajesh. Now third entry. Paid rent through check. Paid rent through check. The rent is an expenses. Rent is an expense. All expense will be debited, all incomes will be credited according to nominal account rule. Nominal account is that account relating to expenses, losses, incomes and gains. The rule is debit all expenses and losses, credit all incomes and gains. So rent is an expense. It should be debited. So rent account is debited. Rent account debtor 5,000. Now we have to see whether we are paying cash or issuing a check. If we are paying cash, we would have written to cash. We are not paying cash. We are issuing a check. So amount is paid through bank. When we issue a check, the amount will be paid through bank. So to bank. Rent account debtor to bank, being the rent paid through check. 3 entries are over. Now fourth entry, interest received. So first of all, this interest received is an income. Interest received is an income. So income will be credited. What we are receiving? Cash we are receiving. So cash is coming in. So cash account is debited. Cash account debtor 1,000 because cash comes in. So we have debited cash. For what we have received the cash? Interest. We have received the cash for interest. So to interest account 1,000. Cash account debtor to interest account, being the interest received. Next one, goods withdrawn for personal use. See here, when the owner invests the money in the business, it is called capital. When the owner withdraws cash or goods from the business, it is called drawings. The owner may withdraw cash or the owner may withdraw goods. In both cases, it is called drawings. So here also drawings. So goods withdrawn for personal use. When cash is withdrawn for personal use, the entry will be drawings account debtor to cash. If cash is withdrawn. But here cash is not withdrawn. Goods are taken. In that case, purchases account should be credited. Purchases account should be credited. So entry will be drawings account debtor to purchases account. 4,000. Being the goods withdrawn by owner for personal use. Remember this entry. If cash is taken for personal use, then drawings to cash. If cash is not taken over but goods is taken over for personal use, the drawings account debtor to purchases account. Next, cash withdrawn from bank for personal use. Here personal use again, but cash is withdrawn from bank. So entry will be drawings account debtor to bank. Because he has taken the money for personal use, so drawings account should be debited. He has not taken the cash. He has taken the money from the bank. Withdrawn from the bank, so to bank. Being the cash withdrawn from bank for personal use. Next entry, cash withdrawn from bank for office use. Cash is withdrawn from bank for office use. So cash is coming in. Cash is coming in the business. So cash account is debited. From where this cash is coming in? From bank. Because we have withdrawn the money from bank for our office use. So cash account debtor to bank. Being the cash withdrawn for office use. Check received from Desai. Check received from Desai. Desai is a person. He is a customer. He has paid the cash through check. So we have received the check. When we receive the check, we should debit the bank account. We should debit the bank account because we are receiving the check. The bank account debtor. Who is the giver? Who is giving this check? Desai. The bank account debtor to Desai, being the check received from Desai. Next entry. Check issued to Verma. Check issued to Verma. Verma is a supplier. We have paid to Verma through check. So Verma is the receiver. So Verma should be debited. So Verma account debtor. What we are issuing? We are issuing a check. So bank account is created. See here. When check is received, bank account should be debited. When check is issued, bank account should be credited. So Verma account debtor to bank, being the check issued to Verma. Last entry, salary paid in cash. When salary is paid, salary account should be debited because salary is an expense. All expenses and losses should be debited. That is a rule in nominal account. All expenses and losses should be debited. So salary is an expense. Debit salary, salary account debtor. To what is going out? Cash is going out. So cash account should be created. Being the salary paid in cash. So this is a recording of transactions according to traditional method. Old method, conventional method. By passing the journal entry We have recorded the transactions. Now the same problem, it is asking you to record according to modern method. The modern method is called accounting equation method. According to accounting equation method. Accounting equation says assets is equal to capital plus liabilities, or assets is equal to liabilities plus capital. If you add up liabilities plus capital, it is equal to assets. For example, Mr. X has invested 1 lakh rupees in the business, and apart from that he has taken a loan from bank of 50,000. The loan taken from bank is a liability, and the capital he has invested is 1 lakh. The total amount fund in the business is 1,50,000, because 1 lakh rupees is the capital introduced by the owner and 50,000 rupees is the loan taken from the bank. That is a liability. So 1 lakh rupees capital, 50,000 rupees liability. So capital plus liability, 1 lakh plus 50,000. 1,50,000 is the asset. That is called accounting equation. So how to record the transactions according to this accounting equation method? That is called modern method. So in this method, how to record? I'll explain you here. Serial number, transaction, assets, liabilities, capital. We don't have any debit or credit. We have 3 columns: assets, liabilities and capital. Now each transaction we will read and see what is the effect on assets, liabilities or capital. And every time after recording the transaction, the equation should be satisfied. What is that equation? Assets is equal to liabilities plus capital. This equation must get satisfied after every transaction. The first transaction, commenced business with cash. First transaction, business commenced with cash. So what is coming in the business? Cash is coming in. Cash is an asset. Cash is an asset. So here assets column 50,000 cash. 50,000 cash. Now who has invested this money? Owner. When the owner invests the money in the business, it is called capital. So in the capital column, I have taken 50,000. So 50,000 assets and 50,000 capital. No liabilities are there. Liability is 0. So assets is equal to liabilities plus capital. So 0 plus 50,000 is 50,000. Next, second transaction. Amount borrowed from Rajesh. Amount borrowed from Rajesh. So when a business borrow the money, our cash will increase, our assets will increase because we have taken the money. So how much borrowed? 20,000. So amount borrowed from Rajesh, 20,000 rupees, assets increased plus. But we have taken a borrowings. Borrowing is a liability because in future we have to repay it. So borrowing is a liability. So here also 20,000 rupees liability have increased. So plus 20,000. No effect on capital. No effect on capital. We have taken a loan of 20,000, our assets have increased. Apart from that, our liability also increased because in future we have to repay it. So 20,000 assets increased, 20,000 liability increased. What is the new equation? 50,000 plus 20,000, 70,000 are the assets. And 0 plus 20,000, 20,000 is the liability. And 50,000 plus 0, 50,000 is the capital. Now see here. Assets is equal to liabilities plus capital. So 70,000 is equal to 20,000 plus 50. So 20 plus 50, you will get 70. Account new equation, tally it. 2 transactions completed. Now third transaction is paid rent through check. Paid rent through check. What is the effect to see here? When we pay the rent, rent is an expense. Rent is an expense. By paying the expense, our profit will come down. By paying the expense, the profit will come down. When profit comes down, the capital comes down. By profit earned, the capital will increase. By expenditure incurred, the capital will decrease. So this rent payment will decrease the capital. And also it will decrease the asset because we are paying through bank. The bank balance will come down. We are paying the rent through bank. When we pay through bank, our bank balance will come down. So there is decrease in asset. So decrease in asset and decrease in capital. See here, rent paid through check minus 5,000. Why I have taken assets have decreased? Because we have paid through check. When we pay through check, our bank balance will decrease, and bank balance is an asset. Bank balance is an asset. So there is a decrease in asset, minus 5. Similarly, no effect on liabilities. There is nothing about due. And this 5,000 rupees should be deducted from capital. Just now I told you, expenses will reduce the capital. Incomes will increase the capital. This point you have to remember. Expenses will reduce the capital. Incomes will increase the capital. Here rent is an expense, minus. So 70 minus 5, 65,000 is the new equation. 20,000 plus 0, 20,000 is the liability. 50 minus 5, 45,000 is the capital. Now you add up 20,000 plus 45,000, 65,000 assets. New equation. 3 transactions completed. Now fourth transaction, interest received. Interest received in cash. So when cash is received, our assets will increase. Our assets will increase. So there is a plus 1,000. In assets there is increase of 1,000. Now this interest received is an income. Interest received is an income. By increase in income, our capital will increase. Increase in income, capital will increase. So capital 1,000. So our assets will increase by 1,000. Capital will also increase by 1,000. Now 65 plus 1, 66,000 is the asset. 20,000 is the liability. 45 plus 1, 46,000 are the capital. Now you add up 20 plus 46. 66,000 is the new equation. So after every transaction, the equation must get satisfied. The equation assets is equal to liabilities plus capital. So how many transactions? 4th over. Now 5th, goods withdrawn for personal use. Goods taken by the owner for his personal use. So when goods are taken away, then our assets have decreased. Business assets has come down. The goods are decreased. So minus 4,000. So when goods are taken for personal use, his capital must also decrease. His capital must also decrease. So decrease in capital minus 4,000. So 66 minus 4, 62,000, 20,000, 46 minus 4, 42. Now check 20 plus 42 is 62,000 new equation. Now cash withdrawn from bank for personal use. Just like he has withdrawn goods, now he is withdrawing cash for personal use. Cash is going out. So there is decrease in assets. Decrease in assets by 3,000. Similarly, cash will also be decreased from capital. Because he has withdrawn for personal use, the drawings will be deducted from capital. The drawings in goods we have deducted. Now drawings in cash we have deducted. Now see, 62 minus 3, 59. 20,000. 42 minus 3, 39. So add up 20 plus 39, 59,000 new equation. Now 7th, cash withdrawn from bank for office use. Cash withdrawn from bank for office use. That means our bank balance will decrease. Cash is coming in. Cash is coming in the business. So our assets will increase. Our assets will increase. At the same time, bank balance is decrease. That means cash and bank balance both are assets. Cash and bank balance both are assets. So when cash is withdrawn from bank, our cash will increase. So its asset increases. At the same time, bank balance will decrease. So decrease in asset. So one increase in asset, the other decrease in asset. No effect on asset, no effect on liability, no effect on capital. No effect on liability and no effect on capital. It's a transformation of one asset into another asset. Earlier we are having bank balance. Now we have withdrawn bank balance for cash, for business purpose. So cash is coming in, so asset increased, plus 6,000. Similarly, bank balance has come down, so there is decrease in asset. One asset increased, another asset decreased. The asset increased, cash in hand. The asset decreased, bank balance. So minus 6,000 plus 6,000, balance remains same, 59,000. 59,000 minus 6,000 plus 6,000, 59,000 same. No change in liability, no change in capital. So 20 plus 39, 59, new equation. Now check received from Desai. Check received from Desai. Desai was the customer. Because customer only will pay the amount. No? We are having a business. We have received the check from Desai. Why Desai has received the check? Why Desai has given us the check? Because earlier we have sold the goods to Desai. Right? So Desai is a debtor. Desai is a debtor. So now we have received the cash from debtors. The effect is we are getting the cash. Our asset is increased. At the same time, debtors are decreasing. Debtor is also an asset. The customer balance, book debts, is an asset. So when he has paid the amount, our cash increased, but debtors have decreased. So one asset increased, the other asset decreased. The total assets will remain same. So here, check received from this side plus 9,000. When check is received, our bank balance have increased. At the same time, the debtors have decreased. So minus 9,000. Plus 9,000 minus 9,000. Total remains same, 59,000, 20,000, 39,000. So it is just a transfer of one asset into another asset. Simple example I'll give you. Suppose I'm having cash in hand 10,000. I'm having a bank balance of rupees 20,000. 20,000 rupees bank balance I'm having, 10,000 rupees cash in hand I'm having. Suppose if I withdraw 5,000 rupees from bank, is it an income to me? Not at all income. My cash in hand balance will increase and my bank balance will decrease. So total assets will remain same. Similarly, amount is due from customer. He is a debtor. So debtor and cash both are assets. So when he has paid the cash balance will increase, but debtor's balance will decrease. So total assets will remain same. Issued check to Verma. We have paid the check to Verma. So Verma, who is Verma? Supplier. We have purchased the goods from Verma. Now we are paying the amount. So Verma is a liability. The amount due to Verma is a liability. The liability will decrease. When we pay the amount to Verma, the liability will decrease. And also our cash balance will decrease because we are paying the cash. Cash or check? Check. We are issuing a check. So our bank balance will decrease and liability will also decrease. So minus 7,000 asset. Asset will decrease by 7,000. Our bank balance will decrease by 7,000. And liability will also decrease by 7,000. No effect on capital. So 59 minus 7, 52,000. 20 minus 7, 13,000. 39. Now you add up 13 plus 39, you will get 52,000. New equation. Last, paid salary. Paid salary. Salary is an expense. It's a nominal account. So salary account should be debited. That means it's an expense. Cash is going out. When we pay salary, cash is going out. So decrease in asset. So asset side minus 3,500 because cash is going out. At the same time, it is an expense. Expense will reduce the capital. Just now I told you. Expenses will reduce the capital. Incomes will increase the capital. Here salary is an expense. So the capital will get reduced. So minus 3,500. No effect on liability. So 52,000 minus 3,500, 48,500. 13,000. 39,000 minus 3,500, 35,500. Now you add up 35,500 plus 13,000. 30, 40, 48,500. 48,500 is the new equation. That's it. So this is the recording of transaction according to modern method, American method, where transaction will be recorded according to accounting equation. Accounting equation is assets is equal to liabilities plus capital. That's it. So this is the problem, new type of problem I have done, where 10 transactions were given. Those 10 transactions we have recorded according to traditional method by passing journal entries, and those 10 transactions are recorded according to modern approach. That's it. So totally 4 problems are completed in this video. So if you are satisfied with my lecture, if you think that these lectures are increasing your knowledge, it is easy understandable, so give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video. Give your comments on these lectures, and finally don't forget to subscribe my channel. We'll continue the next problem in the next video.